Hi, this is Alan Laupsch from Financial Network Analytics, and welcome to F&A Correlations. Today I'd like to explore whether gold is losing its allure as a flight to safety asset. We see here in front of us our cross-asset dashboard, which includes 41 of the most liquid ETFs traded in global markets. And this is a correlation network where the most correlated assets are closely grouped together. So we can see that in the center of the network we have equities. For example, we have here financials, which is very highly correlated to the S&P 500. So short link means high correlation, 0.93 correlation between financials and the S&P 500 in this case. And we can see the red links are negative correlations. So we can very quickly see that there are two favored flight to safety assets currently. The Japanese yen, which has a negative 0.66 correlation, and you can see that's a very stable negative correlation. The last time that was positive was on the 18th of June or so, and the correlations have been quite strongly negative, as negative 0.86. And so that correlation is 0.65, and we can see the second asset has a slightly higher negative correlation, negative 0.67. So that's the US 20-year government bond. Bring that up here. And we can see that correlation as well tends to be strongly negative, as negative 0.73. It briefly was positive in December, but generally has been quite negative. We can see gold is all the way out here, meaning that it's not as reliably negatively correlated as government bonds, right? So if we do a focus view on gold, let's explore the correlations here. We can see that gold is negatively correlated to many of the assets here. For example, it has very strong negative correlation to China, negative 0.49. But that correlation is decoupling slightly. It also has a strong negative correlation to the US dollar, negative 0.46. Let's look at the S&P 500 right now. The correlation is negative 0.44, which is down from its peak of negative 0.53. So really what we're seeing here is that gold, which used to be more favored as a flight to safety asset, has moved from being closely negatively correlated to equities to showing a weaker correlation. If that persists, then the reasons for owning gold are not as strong. So this could be a headwind for this asset, which is just coming off of its 100-day high here, but with very, very high volatility. So one of the questions that investors might ask is whether gold is in a bubble again, and whether that bubble has been inflated by a fear trade of flight to safety, which is now diminishing. Thank you for watching. If you have any questions, please feel free to email me at alan@fna.fi.